Alright, welcome back 99 family, and I'm bringing you guys another video on, you already know, personal finance, business finance, and professional development. If you're new to the channel and that interests you, please don't forget to subscribe, click the notification bell, and click all so you get all the videos we post. Give us a great thumbs up and leave a comment, especially if you have any questions, so that we can get more content out that caters to your needs. With that being said, let's get into the video. So today we're talking about business credit. This is actually a requested video. Someone asked me to kind of outline the types of business credit, and you know, kind of correlate them to personal credit to give them a better understanding. So, I always like to bring in this aspect of, pros and cons, and I like to enlighten you all on how I personally think about things and how it might make it a little bit easier for you to understand. So, on the personal side of credit, you have, two types of credit that show up on your report. You have installment loans and you have revolving credit. On the business side, you basically have the same thing. These things are just, coined a little bit different or talked about a little bit different. However, again, you're basically talking about the same things. So, with personal credit, you have your installment loans, your credit cards, and your charge cards. This is where this gets a little bit different on the business card side. You have your loans, you have your business credit cards, and you have your net accounts. So if you don't know what a net account is, this is kind of going to take place of your charge card, but these are through vendors. So they're more store specific. Like Amazon has a net account, PayPal has a net account, most gas stations have net accounts. These accounts are through a specific company. They're more consumer based, generally speaking, and they usually can only be used within that one consumer. But like a charge card, how you have a charge card and you have to pay it off within that month time frame of your statement, versus a credit card where you can revolve debt. This is the same way that these net accounts are set up. They're set up where you can you're required to pay them back within a certain time frame, and it'll be listed on the account. So if it's a net 30, which is the most common one you hear people talk about, a net 30 means that you have to pay it back in 30 days. A net 15 means you're paying it back in 15 days. A net 45 or net 60 is 45 or 60 days, and I've seen even net 90s. Personally speaking, if you have good personal credit, these vendor accounts, these net accounts are more for people who are trying to build their business credit and add a lot of trade lines to it quickly. So it is a good route if you have that extra money to go that way. If not, I recommend repairing your personal credit first and just going straight into these business credit cards, and building with these business credit cards, because business credit cards have very many benefits, but they also can be way more tricky than dealing with personal credit cards. So I want to kind of lay this out for you guys. With the business credit card, they may not report. Some business credit cards don't report to business, don't report to personal. And that can be great depending on what you're trying to do with your business. If you're not worried about building up your business credit score, you just want those funds, go to a credit union, because most credit unions don't report their business credit cards. Always ask first, do your due diligence, but go to a credit union, get that credit card. Get that $10,000 limit on a business credit card and take advantage that it's not reporting to business or personal, so you can use it however you want to. I'm not saying use it irresponsibly, but it allows you a little bit more pull, especially because on the business side, utilization isn't as hard of a factor as your payment history, and whether you pay on time, pay in full, or pay early. Um, so if you have a card that's not reporting at all, just remember you do have to pay it. It is your debt. However, you can kind of control it a little more. If you have a card that's reporting to your business only, then you can utilize more of that card than you could with a personal card. And a lot of these business cards have longer 0% interest introductions. So that can definitely be used to your advantage and allow you to take advantage. Another thing with business cards, you have to be careful of this. Certain companies report them to your personal report. This could be great for you or this could be horrible for you. If you're trying to build your personal credit and your business credit at the same time, and you can get a Capital One Spark, that is golden. You are winning. If you can get a Discover card or one of those other banks that's reporting to business and personal, you are winning. Because you can get that card, use very small amounts on that card every month, and build up both of your reports. You can build your personal and your business report at the same time, and that's winning. Even if you're more established, but you just want an extra trade line for both, that's winning. Now, if you're trying to get under 524 or something, and that's why you're applying for business cards, know a card that reports to your personal that's a business card is not going to help you in that specific situation. So again, do your due diligence when you're applying for these cards. Make sure that you know where the card reports, whether it's reporting to personal, whether it's reporting to business, whether it's reporting to Dun and Bradstreet, whether it's reporting to Equifax, Experian, TransUnion, wherever that card's reporting, you want to know. Or if it's not reporting at all, you want to know, because that allows you to know how you can utilize that card to better benefit you and your company. And lastly, business loans. I personally will say if you do not have a purpose for every dollar of that loan, do not pull out a bunch of extra money that you don't need, because remember, you're going to have to pay interest on this money as long as you're holding it. So it doesn't make sense for you to go and get money and hold it to pay the bank. Does not make sense for you to hold it and have to pay more and more interest on that money every day. Personally, I've gotten loans, I've overshot how much I actually needed, and I didn't have another, quick investment idea at that moment. So I said, you know what? Let me send this money right back to the bank, knock down my principal on my loan. With certain banks, specifically the one that I've used, or certain financial institutions, I should say, banks and credit unions, they allow you to prepay your loan. So, I send back a prepayment and it knocks down my interest and allows me, to pay a little bit less on that money. So you don't want to take unnecessary debt. This is not what we're telling you to do when we're talking about business credit. It's not what we're telling you to do when we're talking about personal credit. So keep that in mind whenever you apply for a loan. The other thing with business loans is that they may require a strong personal guarantee or strong business scores already in order to get those loans. These people don't want to just loan to Joe Blow down the street. They may require a business plan or something showing your goals for the money or your intent for the money. You have to be prepared for those things whenever you're taking out these loans in the name of your business. So you don't want to be taking unnecessary debt that you can't pay back. You also don't want to not be able to get a loan because say you've got all these net accounts and you come with a strong business score, but they say, oh, well, we still need a personal guarantee because of your industry or because of something else, and then your personal score sucks and you can't do anything about it and you're stuck. And we've been in those situations, so we're trying to get you guys around those situations, for you to understand that just as well as it's important to have, these net accounts, these business credit cards, and other things to build up. You want to make sure that you have a strong personal guarantee. You want to be able to personal guarantee anything. Now, you also will prefer no personal guarantee. You prefer things to be, your business to be responsible for your business. That's the main goal. But if you have to start off with PG and you have to start off with putting your personal guarantee behind yourself, who should believe in you more than you? But you got to be reputable enough for them to believe that you believe in you and you're willing to be responsible behind that. So, with that being said, that's my take on business credit. That's how I look at this. Um, these are, my specific ways of looking at them. Like I said, I look at net accounts like charge cards, credit cards are credit cards, and loans are loans. Um, and that kind of allows me to relate them to personal credit and give me a better understanding of what I'm looking at. Um, and that's pretty much it. If you have any further questions or any specific questions about how to get any of these, or specific ones that I recommend, I may leave a few down in the description, and please feel free to reach out or comment, and I'll answer your questions as quickly as I can get back to them. Thank you all for watching, and I'll see you in the next video.